Welcome back, Market Mastery. We've missed you. We've been gone. We've been traveling, doing some things, but we are back and better than ever. I am excited to give you your 1 hour breakdown of the market and exactly how you can take advantage of the volatility. I want to show you the two setups we're seeing on the S&P right now that will give you two directional options trades that will make you money in any market, bull or bear, up or down. And then we will showcase some of the tools and platforms like ValueSense that we are using in our everyday research and trading so that you guys have the edge on the rest of the world. I'm joined by my handsome companion here, Mr. StockSavvyShay. Welcome. It's been brutal. It's been brutal.
You guys aren't having fun? I'm having a great time.
You're having a great time? That's what is your experience with this right now? That's my question.
Yes. I mean, first off, we told you guys. When did we say there was going to be a pull? Like things might get capitulatory when we break the 200-day moving average, and the 200. Are we on SPY right now? Let's see.
Yeah, I think we were right up here when we were talking about that this level was pretty critical. It's like 585, give or take.
Yeah, actually, 575 was like the
we lost
$100. Watch out. Then. Yeah. So, guys, stage 4 breakdown on charts. That's when people lose money. Stage 2 is when you make the money. So stage 4, all about time horizon. As a long-term investor like myself, 5+ years out, I don't like selling my high conviction names just because we had a technical breakthrough. Like we broke a technical level. That's not my style. What I did was I changed my characteristics and my behavior as a long-term investor for the near term. I got defensive, as my subscribers know. Like I've been hedging this year, and my hedges have resulted in me having an 8% cushion in my year-to-date performance. Yes, I'm still bleeding, like bleeding, but without my hedges, I don't even know. I think I'd be down 13% without my hedges. Now with my hedges, I'm only down 4 or 5. That's the point of hedging. Buy when the hedging is cheap. When the VIX has 60 handle, that's not when you buy. The FUD is priced into the market right now. So when we break the 200-day moving average, like I change my behavior on what stocks I'm adding. Like it's not going to be the speculative names, because when we get these kind of macro-driven pullbacks, they don't happen every couple months. When the VIX is a 60 handle, it happens a handful of times a decade, to be honest. Like it's not that common. So when there's a macro-driven pullback like this, everything goes down with it. Everything. So it allows you to reposition your portfolio into the winners the past couple years that are getting penalized just because the market, high stakes poker game that Trump's playing right now, and everything's going down with it. Doesn't matter how good of a moat you have, defensible competitive advantage, you're going down. So that's why it gives you the opportunity to add some names that you didn't think you'd have the chance to before. And that's exactly what I'm doing. Like I'm kind of not adding to my speculative names as much. I'm going to my highest conviction names, repositioning my portfolio, because when we bounce, because we will bounce, nobody really knows when, but we will 80% of the time. It's up to the right, guys. Zoom out a bit. I want to be positioned with my favorite names, because I'm not going for rentals right now. I'm going for my 5-year plus out highest conviction names. And any rental I had, or any kind of falling knife, like, oof, thesis is cracking a little, that's the first stock I'm dumping if we continue capitulating right now.
I love it. So I'm seeing right here as we break down. So just so you know, 2 times when this was the first bear put entry, when we lost 597, that's when I gave you the trade idea I had. And then we did it again here at 575 rejection. You could see how those paid out from the first call out at 598. The S&P has dropped. What would that be? $120. So that being said, I believe, what are those 556 puts that we called out? Those are the ones that are up 1,306% if you took those. So congratulations. You turned $1,000 into $100,000 if you had that. Or is it 10 grand? It's 10 grand because of 10x. Excuse me. So yeah, that's it. We looking at this week, I think that there's a lot of indecision and there's a lot of fear. And I would use really today's price action as the guide. You can see that we pushed as high as 523. How, I don't know. After going as low as 481, that was an overreach. So I'm focused on this level, this 500 level right here. Not only is it a major psychological level, but it coincides with the last time we saw a push up to 524. We found support at about 500, dip below briefly, but that's where buyers came back in and held support. So we would expect to see something similar if this is going to be a demand zone moving forward. So what that does is that gives us the opportunity for a bull trade as we bounce off of 500. Again, we want to try to do this on the 15 or 30-minute candles. So if we open and we dip and touch 500 as a support level, we are going to target 507 calls 2 weeks out. You can easily go to, I would say, let me give you the exact expiration. April 21. Either the April 17th or the April 21 expiration date, the 507 call. That should be a great trade. Off support at 500 and then trade it on the way up, get a $5 move. That should be a nice 20-30% gain minimum. The contracts today ran about 60% that I posted in the Discord. So if you're not in there getting the live trade alerts, get in there as soon as humanly possible. We posted all those live. So that was a in the moment trade that paid. It was delightful. Let me get this so the link can scroll across the bottom. So that's your bull trade. On the flip side, the bear trade is quite simple. It leverages the same level. It leverages the same level, which is about 500. I'm not really concerned with upside. If we get a push to 513, 524, I think there's a bear trade there, but I don't like the risk because this is due for a little bit of rebound, so I've focused on the upside for that. But in the event that we come down and we test 500 and we break, and then we get a 15-minute confirmation, okay? We get a 15-minute confirmation that – let me get rid of this. Okay, so let's say we open up neutral, we come down, we get to test that 500 level. If we get a confirmation on the 15-minute where this dips below, pushes back up, and gets rejected, I am going for blood. 484. It's out of the money. It's a little extreme, but it's a lotto pick that will pay, I think, handsomely. So I'm going to be looking at the 484 puts for April 21 or April 17th. Choose your choice. But that would be, oh, wow. Wait, hold on. For April 21, lowest puts we have are 490. They haven't even written enough options. Jesus Christ. Those are stacked. So you probably got to go April 17th. Wow, that's really odd. That means nobody. Wow, these are expensive. IV is through the roof. God, these are expensive. Dude, the 44 puts are $1,000. These are roughly 8 to 10x the premium that they typically are.
Do you guys know that exactly why the VIX is so correlated with the option pricing? You guys just heard it from Austin. Like, it has a lot of fears priced into the option chain right now already. It just is. When the VIX is at 60 handle, that's COVID peak level fear. And you guys all remember COVID. The world shut down. It was a widespread illness that nobody really knew the end of.
Look at
that. On Monday, today, like last Friday when we closed, the implied move just for today was 4% on the indices. 4. That's what the VIX hit at 50 handle. It's too expensive to play options. Like, I think, I don't know, selling puts might be an interesting angle if you think there's going to be a bounce. For example,
oh yeah,
like you want to buy
if
Tesla under $200.
Absolutely.
Yeah, if you want. Yeah, so like Tesla, I don't know, 180 Tesla selling Tesla puts at 180. That's interesting to me. I think Amazon selling Amazon. I know people keep saying 120 gap, but like that's interesting to me. Like 150 maybe. So selling puts on stocks that you're willing to buy at that price is the way to make money right now, in my opinion, in this environment. Especially if you don't have the DCA coming in every week. That's how you kind of get rent for the stocks, for wanting to buy a stock that you would buy already if it hit that that price, but you're getting rent in the meantime. That's the way of thinking about it. So
that's a great way to put it. So what he's saying, you guys, is you sell this put contract. You're saying, hey, you want to buy this? Tesla might go down. And they're saying, yeah, I think Tesla's going to go down. So they're going to buy the put, right? But you're selling it because you're like, it's not going down. It's going up.
Well,
which means it's
also
worthless.
It's also, it's pricing that it's going to go down significantly more than it actually will be.
Right. So because of that implied volatility, I don't know why I air quoted it, but It's basically like, look at it as surcharge pricing with Uber. You guys get that? Does that make sense to everybody here? Just so I just want you to understand the base concept. That the reason you'd be selling them now is because they're artificially inflated because of surcharge pricing, effectively, aka the VIX. So it makes more sense to sell them now because even if they go back down to fair value, you still made money. Easy as that.
100%.
And Tesla's and Amazon's an interesting one. So somebody asked earlier what stocks are on that watch list that you add when the time is tough. Me and him were just talking before we got started here that Amazon was one name. I did scoop a couple at 165. I didn't catch 160. I wish, but I paid attention enough to get him at 165. So I was telling him, here's what I did. I plan for the future as much as you possibly can. I had $5,000 from something unexpected, so money I didn't expect to have. Okay. I wasn't comfortable buying Amazon when it was at 240, 220, whatever back here. I didn't feel like buying it back then. So what did I do? I simply put that money in cash in my brokerage account and I earmarked it for Amazon. This whole $5,000 is going to go towards Amazon when the time is right. In August of 2024, I had money ready and I bought, and that was a beautiful decision. I did the same thing this time, throwing another $5,000 in at 165. This is a name I intend to hold probably in perpetuity. So I'm not as concerned with volatility. I just am concerned with getting a good deal on a good stock that I like. I was comfortable to deploy 40, maybe 4,200. I have like $800 left. So I threw the $4,000 out of the 5 into this stock when we hit 165. I set a notification to tell me if it ever hit 165 because that was a key level I'd already identified as major support. So if you guys use the tools that are available, like just using TradingView, for example, you can set an alert that'll tell you when it's time to buy based on the levels we break down for you. You can also go follow the TradingView account because we publish these charts, which might make it easier. But that was one name that I had earmarked ready to buy because it was at that key demand level that I wanted to see, that I thought I could maybe get in a moment of panic. And sure enough, I did. So before I shut up and I'll let Shay tell you which one he's liking. When everyone's panicking, the market should be going down, right? The bearish, it's justified. But sometimes you get, like I knew over the flood of the weekend with those Kramer posts of Monday's going to be the worst, blah, 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 blah. Retail inflows were some of the strongest for the S&P on these dips. Now, are they using us as exit liquidity? Probably. But on the same token, this is a name that I feel heavily confident in, that if I buy it at this level, the stock's going to be worth 5-6 times what I paid for it in 10, 20 years. I am pretty confident of that. So I don't really care about a dollar, give or take here and there. I just had the money ready. I had it earmarked. I had an alert set. That's all it took. I bought the stock. I'm already up again. $10 a share.
Yeah.
What about you? What was on your list, your shopping list?
So there's so many deals right now. Like MongoDB is at 140, Snowflake's at 120. I haven't really been adding to either names. I'm in defense mode, guys. Like I'm very bullish on those names. Like every holding on my portfolio, I'm obviously bullish in. Like I wouldn't be holding a position if I didn't have a thesis on how they're going to fit in the agentic AI world, or something in the fourth industrial revolution, or have some kind of moat or competitive advantage. However, when the indices are trading below the 200-day moving average, my behavior as an investor changes. I'm going to build on an anchor stock, and that anchor stock was Amazon. I've been adding aggressively to Amazon. But
same page.
That was a couple weeks ago or 2 weeks ago. Now there are such incredible deals out there in early sector growth themes that won't be as impacted, in my opinion, as what the market's indicating it will be. So, like, I think the market deserves to pull back. Absolutely does.
Right.
Like, this is user error or man-made correction. Call it whatever you must. It deserves to be, because the risk, nobody can control the risk in the next 2 weeks, 3 months, 6 months. That much noise, the market's going to hate that because they need clarity. But
right.
I think there's opportunities in specific growth themes that won't be as impacted that I think maybe the market thinks it's going to be. And one is cybersecurity. I think business spending is going to be impacted right now, 100%. And a lot of people might ask, like, why is that? I mentioned it. You're clearly seeing capital not rush to fill the void of the 20% pullback we've seen in the Qs. It's sitting on the sidelines right now. And the reason for that is a lot of these like big whales, they want to preserve optionality. They don't know what's going to happen once China comes back with their tariff, like what Trump's going to do on top of that. Like the pieces are still moving on the table. So they want to put their money in the sideline. You still can get 4% in a money market and wait it out. Like there's no rush. You outperformed for 2 years in 23 and 24. But as an enterprise right now, no CEO can confidently model out any kind of CapEx plan this year, next year, or even a 5-year one. No CFO will stick their neck out on having an aggressive working capital in their IT budgets. That might be wasted capital if things get worse in the tariff wars. No board can greenlight any kind of growth initiatives or adjust their supply chain onshoring when they don't even know if the tariff is going to double this time next week. You actually just don't know. So that's the environment we're in right now. There's just so much uncertainty and so much clouded information that the confidence is fully lost. That's going to affect business spending. And that's going to affect software companies with a consumption model. It's going to affect ad tech players because that's the first discretionary budget that gets cut in any kind of recession is ads. So I think Trade Desk is freaking dirt cheap in the 40s. I haven't added. Why would I put my chips on the table where it deserves to be affected by this narrative? Because if this lasts months, not weeks, ad tech companies are going to be having a brutal 6 to 12 months. Brutal. It's going to be recessionary to the max. And also, business spending will get impacted severely from all the reasons why I said. And that's going to affect consumption models. It's going to affect the MongoDBs, the Snowflakes, the Datadogs, like the Confluence, etc. Like they're going to have a really impactful near term. And I think the stickiest component of any IT budget is cybersecurity. That is one of those themes, few places where growth
you can't avoid
and
it. Especially
you can't
all
avoid
the
it.
hostage situations this last year. Like so many companies got held hostage for Bitcoin. So many.
Yeah,
this year.
not even just that. It's just like there's few areas in the whole market where growth and becoming defensive with your investments coexist, and that's security. And we're entering this new age of defense where it's not just guarding data; it's evolving. Like, you have to ensure operational continuity, in an increasingly like autonomous, like you just mentioned, autonomous AI powered and digital world we're in. Like you're going to kind of need to have the latest and greatest. Like you're not going to penny pinch on what security layers you have in your enterprise because that is the engine of your whole enterprise. And if it gets hacked, you're screwed. So I think that's why. Yeah, it's done. But that's why I think security, like the new age of defense, I have 5 names in the new age of defense. I think that's going to be the next, like, that's a perfect combination of risk and defensiveness where, like, I had an 18% cash position at one point. Now I have 5.
Right.
But I've been allocating towards that theme where it's a combination of risk and reward when I think Snowflake at 120 is freaking cheap. I added 5% to my position, but like, I should have added way more if we were above the 200-day moving average on the indices. And now my behavior as an investor changes because of that.
So that's basically the defining indicator used to determine like how aggressive am I going to be with this?
Yeah, I mean, because Snowflake has a narrative problem, guys. Like, I'm not ignorant to say that. Like, I believe in Snowflake in the agentic AI world. Look at their history and post IPO. It's been a failure. It's been opportunity cost. I think the last 2 earnings reports validated their narrative change of AI won't cannibalize them. It's going to become part of the AI enterprise AI tech stack, but that narrative is still evolving. It's not there yet. So I like to invest in companies right now when we're in this kind of environment that have monopolies. There is no competitor that does what they do. and they're in an early secular growth theme with a ton of runway, ton. So I've been just putting my chips on those names because it's somewhat of a safe haven. And those companies, they're worth less than $50 billion. Like they're still have a ton, they're going to be mega caps, in my opinion, when time comes. I think Snowflake could be a mega cap, but they kind of are still in prove-it phase. And that is a risk when Qs are down 25%. Like you rarely get that opportunity. You kind of go for the safer monopoly names. Let's just say that. And that's what I've been doing.
Well, I'll tell you one thing. I love it. I mean, first and foremost, you got to have the high conviction names. You just have to. And when you look at those, you have to be ready to do what's needed at the time, even if it's uncomfortable or painful. I know when the market's bleeding and I have money set aside to grab more shares of something, I just do it. Whereas maybe 5-6 years ago, I would have thought about it quite a bit, and I don't know, and I'd wait, and then it's green, and then I chase it, and it's a whole thing. But I do love the ads. We're on the same page with Amazon. One I needed to bring up just because this is just the buyback and everything was too convenient, and that would be Broadcom. Did you see the buyback announcement?
I did.
I mean, talking about knowing when the time is right. That could build a significant base right here to basically give this stock the power to no longer have to test, $130. This could position them above 200 in a pretty sturdy way. I've just always noticed that about the buyback theme. I love it.
I like Broadcom. It's definitely. I think I own Astera Labs, so I feel like it's duplicative to own Broadcom and Astera Labs, even though they're so different. It's just they move like a bucket almost. So I don't know. I think Broadcom is a great. I think networking and the AI infrastructure is the hot pocket still. I think data liquidity is not discussed enough yet right now, and that is going to become much more of the future. It's not sci-fi; it's a near-term reality. So I think Broadcom is a really great play. But also like the semiconductor theme, it's got some work. It has to iron out some narrative issues. I think the DeepSeek playbook reveal, people are just like, nobody really knows the implications of that. People are like, oh, the last earnings cycle was fine. You won't know until another 6 months. That's when you really figure out the impact of having training data become that much cheaper, and you find the necessities in that semiconductor ecosystem that's going to still maintain pricing power in that post DeepSeek world. Like I have a thesis on who they're going to be, but we really won't know until 6 months. So that's why I almost think that this whole semiconductor bucket is going to be on pause or digestion period until then. And there might be some incredible opportunities that result from that because this is still FUD. They're predicting something that has not happened. So that might be riskier than like opting into business as usual. And there's also a theme of the capex is plateauing across big tech, and it's just they have so many headwinds going against them that you have to ask yourself opportunity costs. I don't know. I like Broadcom a lot. I do. 260 at 140 is kind of crazy in 2 months for a name like that. If I had to put my 5 names that I just love in semiconductor chain, like moats, competitive advantages, it's NVIDIA, Broadcom, TSM, ASML, and ARM. I have some other pockets I like to play in, but those 5 are kind of the kings, in my opinion, that have monopolies in what they do. And they're all moving together. That's the thing. Like they all just move together.
There you go. That's what you need to look for, is where can you find that confluence to where you see everybody's going to the same party all the time. So that brings up a good thing here that I find quite interesting is, for a moment we had decoupling. Bitcoin went the other way. While the S&P went down, Bitcoin started to pump back up. Now, obviously, that fell by the wayside. I would say this is not nearly as harsh of a move as we've seen in the S&P, but I wonder if we continue to see bear market, right? Will we see a true decoupling of Bitcoin? Can it happen? Can it be?
You would think it would happen already.
I
I'm
know.
shocked they didn't hit 70,000 to fill that post-election gap. I'm like shocked. I don't think anyone can really describe why that is. When a lot of the risk on assets are 1-year lows, not even just 6 month. So kudos to the crypto Bitcoin holders, because your thesis is kind of playing out right now, where
Yeah.
it should be going a lot lower. It's not. It's actually the relative strength asset on the risk on trade, and that's encouraging for sure.
This is what I wanted to draw live just to make a point of. Perfect. Just perfect. Right on trend. Bloop, bloop, bloop. So as long as it maintains trend, I think Bitcoin will be in a phenomenal position. I, for one, have sold 0, not a 1. That's very interesting. Last one I want to look at real quick is Apple. Would you say on Apple, buy or sell right now? If you had to, like, gun to your head, you got money to put in, you buy or sell?
Oh, so I always
Selling.
said that what have they done in the past decade that made you believe that they can innovate? Nothing. They're
They're
consumer
still
AI.
riding the iPhone. They're still riding Steve, which
No, but like they're positioned perfectly for consumer AI. Like they're going to be the leaders of consumer AI. But do you have
yeah,
any
why?
confidence that they can do it
So
though?
that's
That's the
yeah, that
issue.
is the question I've always wondered is why wouldn't they lean in? I mean, they also have Siri, so like that's a whole different element. Is like Siri is its own thing. It's its own sub brand within the brand, right? It's a tool that everyone's familiar with, Apple user or not. So why wouldn't you make Siri a powerhouse? You know what I'm saying? Like that could be their positional dominance. Use what's
I think
already
no
advantageous. That's how you get me to buy an iPhone.
machine learning is a different animal in itself. I think maybe they underwrote the how difficult uh machine learning is going to become to just build that. I also think that they didn't acquire enough compute in order to maybe fulfill their vision. It's a lot of trial
Yeah.
and error, a lot of R&D. They put their eggs in the car. They put their eggs in like what I forgot other stuff that wasn't really AI. It was consumer
Yeah.
hardware.
Well, everybody else built out server stack. Like we
Exactly.
just need more power. They did
So
not.
I think they've absolutely failed, and I'm like shocked that Tim Cook doesn't get enough heat because they're Apple. They should have been the leader of this. I know their status quo is like
Oh, Steve
we
Jobs was
won't be
so pissed.
yeah, we won't be first, but we'll be the
Steve would be
best. That's their
furious.
status quo. They're not first, and they're surely not being the best. Not even close. They failed. I'm not even talking about their Vision Pro fail. That was embarrassing. And not just that, the car they just completely just like wasting money on. Like if they just focused on consumer AI, it'd be a different story. But it's embarrassing the rollout of Apple Intelligence. It's actually embarrassing. So at this point in the maturity of Apple as a company, and you invest in them, you have to know you're investing in a financial engineering company who just will do buybacks. They have an incredible moat in consumer lives. I don't think we're going to see a reacceleration for them. I don't feel confident in them, their ability to do so. And they don't acquire
Is
either.
innovation dead at Apple? I think
It's
that's the
been
question. They have a money.
for sure.
They have built an ATM, the largest one I would say that probably exists, and other than the Fed, and they kind of are just riding that. I guess this is so. I just learned recently from someone that like he was kind of he's a capital markets guy, takes companies public. He's basically saying like, here's the kind of company you need to take public, and here's the kind of company you don't need to take public. Apple it became a different animal once public, to where they've created like an illusory machine of non-existent things of which people are ascribing value, and they've found a way to extract money out of that, hard money. Is there a reality where Apple takes the Trump Tower route and just simply becomes a whore to be licensed? You know what I mean? Like
It would
maybe
be
you just
sad.
lend the
It would
Apple
be really
brand.
sad. Well,
It
it's sad
would.
because they're so good at design. They're really good at design and like aesthetics. They're bad in like innovation. That's really it. Um, And there is a world. I'm not saying this is going to happen, but AI, the possibilities are going to be endless in the AI world we're in. There might be an app store competitor? You just don't know. You really don't know. Because I know for a fact people are fed up with the lack of innovation from the iPhones year after year. It's tomato from 5 years ago models. They're kind of like, why am I paying for? It doesn't make sense. There is a window of opportunity for someone to provide something that's similar in not quality, but just like something that's exciting, more exciting. The aura.
Yeah, but they own the driveway and the gate. That's the only problem with the app stores. Like to get
Yeah.
on the iPhone, all roads go through them. That's why it was so genius. But I do think they've locked in Apple. I don't think there's I don't think that you're going to have any sort of emigration from that. Personally, like I just don't see it. I mean, it would shock me. It's such a different experience. Like I really think that's the thing to consider is like, is Apple just going to continue to be an even more translucent husk of itself? You know how sometimes like the animals shed their skin, you can see right through. Like that's what I feel like we're looking at right now. It's like the husk of what once was.
Well, you know what's a disruptor is if AR and VR becomes like part of the future, like actual future. I think the disruptor is MetaQuest. Meta can become their own app store, and why do you need a phone when if they can solve MetaQuest with interacting with people?
And I know you don't love it, but and Snapchat from day one, I've said their AR stuff has been the best so far. First launch, yes, in my opinion, as far as visual filtering, it was one of the first to be truly clean and impressive. Like whatever their facial tracking, the whole thing, whatever they're doing, it's great. I think Snapchat could completely evolve if they weren't dumb as hell and become
it's not they, it's Evan. If Evan wasn't dumb.
Well, I heard they recently pushed him out. Did they not? I thought they pushed him. What? No,
impossible. He has all the voting power. Nobody can push him out unless he volunteers to leave.
So it'll never happen. Sad because whatever they've done there, a company like Meta would be very. I mean, I don't know if we should allow that personally. I'd give Zuck would be a little too feisty if he had that as well. But I do think theirs is one of the best. But again, looking forward, I think it's whoever can adopt. Like AI is now the catalyst to who can develop the integration between digital and real world in terms of application. How can the application layer AI stuff translate into real-time feedback, visual elements, conversational tones, whatever it is, right? So I'm wearing the Meta glasses. Someone's talking to me. Who develops the first facial rec thing that says, like I'm detecting a 22% dishonesty likelihood, like little shit like that. Those are little quirks, right? But eventually, I think it's going to be the world where as someone's talking, it's going to populate to you like a Wikipedia. Would you like to learn more? Look at this. So if you're in a conversation, you can say, oh, shit, look at that. Oh, yeah, it seems like the Welsh first came to Ireland. You know what I mean? Like you'll just know some little factoids and bullshit. I'm not saying it'll be good for the world, but I'm saying I could see it being a part of the world. And I think whoever can do that first and integrate that experience, dude,
they have something.
No, they got more than something. Especially through like the Ray-Ban style glasses. Like the tech's got to get the wearable tech has to evolve significantly for that to really become a thing. Like I'm talking about everyday adoption. What Google tried to do with the lens, maybe 10 years ago, like they were the first to try it. It just didn't work that well. Whoever can capture that, I think is going to be the next 5 from here, the next 5 to 10x opportunity. Even for a large Mac, they could be mega cap. They will just own the world at that point. Can you imagine? And there's a point to this, I promise. When I learned the engineering of Pokemon Go, that for those of you that didn't know, Pokemon Go is the most ingenious thing in the entire world. The whole point of it was to get internal tracking data from the United States inside buildings, in alleyways. They wanted visual data for something they were building. Couldn't get approved to do it. No one would sell them the data. They couldn't get approval to come here and wear headsets and walk around. It's also not scalable. So what do? They license Pokemon from the company that owns Pokemon, and they build Pokemon Go. And so now you are running around with your phone. Oh, I got him. Oh my God. Feeding them all the data that they desperately needed, that they're now turning into billions and billions of dollars. When I learned that, I was truly impressed. Like, wow. Whoever that guy was, genius. But I think my point is this, like, whoever can come up with that style thing to just capture them, like, just imagine what that's worth if you're capturing someone's everyday living experience, their reactions and choices to situations, to understand like their temperament. Like, you're basically giving a marketer's wet dream, like every pain point, every possible idea that you could, like, you're giving deeply personal information. And to wrap this up with, this is where I always hoped the blockchain shit could evolve. I think everyone's own personal identity is going to become, it's going to be reduced to a data point and a likeness, of which, to all of you listening, make sure when it happens, you own your shit. Make sure you own your likeness, your data stream, whatever the hell it is. Like, we're going into like a surrogate style world, but I really think someone with the current, I guess, iterations of the language models and adaptations of AI, and Google doing the supercomputer test that supposedly communed with multiple parallel realities. Did you see that?
No.
That was like a wild press release. We got to find that because that's just so. Their supercomputer basically can. Well, I mean, who knows if it's. I'm not a supercomputer guy, but I'm pretty sure that their quantum computer came back and said, "Yep, I had to tap into the multiverse. I had to jack a couple parallel realities just to be able to get the information that you were looking for from me." Trying to find it. It was really, really, really interesting that the model itself came back and said, "Hey, I had to go into a different." I think I got to find it, but it was extremely interesting. It was one of the coolest things I've ever seen, probably in my life, but also terrifying. Have you seen anything about that?
No, I live in an ignorant bubble of just in the lab studying stocks and watching sports and
This is right up
dissecting
your
my
alley,
mind.
dude. This is exactly the kind of thing I'd think you'd get into.
No, that feels very
I don't know.
noisy. It's not very
I'll
actionable.
find it later. I'm just
That's
saying.
the thing.
It's wild. So, all right, 544. Let's get into it. Smash or pass. Drop your tickers in the chat. We're gonna show you a couple tools. We'll look at a chart, give you a quick info. Hit over to Value Sense. Look at these companies fundamentally to see how they're positioned compared to their peers, to get some great information on exactly how you can research these names. Kenny Penny, my guy, you said Nvidia and Uber. So,
oh, let me share my screen. Let's do that.
Yeah, I'd say do Uber. I'm more interested in Uber.
Nvidia is too easy. It's a buy.
Yeah,
Too strong in numbers. Are you guys able to see my screen? Can you see my screen?
Let me switch them 1 sec. No.
Perfect.
There.
No. Awesome. Let's see what Uber is doing. Ooh, momentum is not good. What happened? Are they dipping extra hard right now compared to other people? That's interesting.
I would assume that most think they will be affected dramatically by the reduction in spending on the consumer side.
Totally. That's what's happening. So,
yeah,
that's a little worrisome.
It's very worrisome. This shit's going back to $40. I think.
Let's what the intrinsic value is on here. $200. Interesting. So there is somewhat of a disconnect on fundamentals and technical on this one. Okay, so next ticker. Should we do Nvidia? Or
yeah, why not? Just pop it in there. So for me personally, pass on Uber. I don't know. Shy could decide for himself, but no thanks.
Oh, I think it's too noisy.
Yeah, consumer spending is going to crush that.
I mean, look at doesn't get better. Look at 10s. 10 growth, 10 profitability, 8.3 momentum. Yeah, I mean, it doesn't get better. I still can't believe this growth stories over here. This is just you'll never see this again. You just won't. Like, I just really don't think you'll ever see like a company this size ever produce 96% CAGR for 5 years on operating income, top line 64% with these margins. It's unheard of. It's crazy. And the stock has not moved in how long?
And not contingent upon consumer discretionary spending. FYI.
Wow. It's been dead for a year. I didn't realize it legit has not gone anywhere for a year.
Right back where we started. Yeah.
Interesting. All right, next stock.
My level was $93 though for the buy.
All
and
right,
it hit
I'm seeing
beautifully.
Shopify. Let's see Shopify. Shopify is getting hit hard again from this tariff stuff, but
Right,
momentum's
but
growing so strong.
they're in double headwind territory, right? Think of where a majority of Shopify purchases are probably shit you don't need. I mean, at least for me, they are. It's not shit I need. I don't buy shit I need on Shopify. Where do I buy shit I need? I go to the store. So consumer
No, it's
discretionary might crush
yeah,
this too.
totally. I think this is probably, to be honest, they're overvalued. So I think we're always going to be overvalued. Price to perfection. The story isn't perfect anymore, guys. It's not. It's noisy. And this last, I didn't even mention this earlier. I do believe that we won't have any guidances this upcoming earnings cycle. Like none. I think
Everybody's just gonna say
no.
for sure. I'll see you guys later.
They have a scapegoat.
Thanks, guys.
They have a scapegoat. 100%. Like we don't have the visit. They're gonna say we don't have the visibility in our risk control for the next 3 months.
Yeah, because of the tariffs. Those
exactly
tariffs disrupted our business.
So that's why this earnings cycle, it's not going to be the savior that people anticipate.
Muted.
Yeah. It's going to be muted, and it's going to be great. It's probably going to be better than feared results from backwards looking, but no guidance. So now what?
That's going to create some opportunity, dude.
It will. That's why I don't want to use all my cash. Like,
no, you can't.
So this is another good point I want to bring up. I am fortunate enough where I put 1% cash in my portfolio every week. So I know that if I buy today, I can probably buy in a couple of days, same stock at a lower price. I'm fine with that. I'm not good at timing bottoms. I'm good at finding early disruptors and secular growth themes. That's my thing. Timing is not, I think it's people can say they're great at it. Fine. I think it's a combination of preparation and luck, but there's still luck involved in it. And I don't like to dictate my long-term investments based on luck. I just don't. So
right.
If you aren't part of that camp, because I know 90+% of you guys aren't, and you have a fixed portfolio, I said it when we broke the 200-day moving average. I'll say it again right now. You sell 15% across the board, raise that cash on the sidelines. So when the VIX hits a 60 handle or we have capitulation, you then infuse that capital. VIX hit a 60 handle this morning. I bought a lot last night. I told my subscribers like live at 10 p.m. I was like, I'm adding this. This is the VIX is exploding. This is the time to buy. It feels capitulatory. And we had a bounce today. I don't think we're over. I think we're going to have a newer low in Q2, but we're going to have a near-term bounce. And I think that's what we got. So have that dry powder ready, because if nothing structurally changes on the tariff wars, we're going to go lower. It deserves to go lower. This is going to be potentially as impactful as a great financial crisis if this is not resolved in a matter of weeks. If this is months, dare I say quarters, we are in a recession. You guys need to highlight, know this. We're going to be a recession if this situation goes into Q3. That's a recessionary. There's no way around it. You have to prepare yourself. I don't think we'll get there because the vanity of POTUS. Why would he be the first man-made recession since World War II? That's not his characteristics. That feels very not Trump. So I don't think we get there. But also, it's all egos. They're bluffing with each other. So you don't know what ego is going to take it to the next level. And they're playing a game of chicken, but it's going to come at the expense of all the consumers' lives. And it's going to affect the middle class. It's going to severely affect the lower income class. And in the meantime, there's going to be pain. Pain. But I think this is going to resolve in weeks. And if not, it's going to push back the momentum we had on AI and fourth industrial revolution years. It is, unfortunately. It just is, because the confidence is not going to be there anymore in this presidency. This might be an issue until midterms. That's the scary thing. It really could be. And even if tariffs get resolved in a couple weeks, there is psychological damage that's been done that cannot be recovered. The confidence in the global supply chain confidence in global trade policy has been permanently damaged and scarred. It won't be back to where it was before because of the levels that we took it. And now there's always going to be that question of like, what if, what, maybe.
There will be. And so if you guys to distill what he's saying into the simple phrase, I think that sums all up. The market prices for predictability. Up, predictable. Down, not. I think. When there's a shared understanding, as he's talking about the trade agreements, everything else, when that's in place, we have some idea of how we go forward and we get this done. When there aren't, and it's tariffs, and everybody's like, well, wait, it's everybody's holding the gun. You don't know if they're loaded, and B, you don't know if they're willing to shoot. You just don't know. So wait. But again, you can't act out of that place. Companies can't make adjustments and do the right things that they need to do to grow if they don't know what the hell the landscape is. It's tough. And so if this lasts till midterms, just buckle up. I mean, there's still going to be opportunity to make quite a bit of money, and I would argue this is the time in which you need to pay the most attention over anything else. When everybody else is like, you know what? Yeah, because I started hearing this. That's how I know. Just like the shoe shine example. When everybody's calling you about a certain stock, it's like, oh, shit, don't buy that. Sell it. GameStop, AMC, all of them, name it, right? The opportunity was there, dead, and gone before they even found out about it, all right? And they became the exit liquidity. Don't be that. I think the same thing is coming true here. I've heard a lot of people like that aren't that into the market, but because I'm in it, they talk to me and say, hey, you know, I'm not even going to mess with that stock thing. This whole drop, this is exactly why I don't do it. And then when I heard that, I was like, oh, I'm getting some cash ready, baby. We're going to be cooking. This is good. So you could take the same sentiment both ways. If you want to be prepared and you want to be the one sitting on top at all these peaks, then just be willing to ride through a couple of the valleys. That's where you get the discount. If you've ever been thrifting, this is basically what we're doing. Like, there's a lot of looking, and you're going through a lot of bullshit. You'll find one or two wonderful things. And once you do, they might be of great value. But more importantly, you're getting ahead. So if you don't want your money to get flayed by inflate, which it is, it sits in cash, it depreciates second by second. You put it in a vehicle, a stock, a certain index, something you like, it'll be good. This is a great question. Why wouldn't Amazon get crushed for consumer discretion?
It is.
They will. It's just one of the only names that I have so much confidence in, just being honest, because their business has evolved so much, dude. To go from books to cloud infrastructure and streaming and like the man has figured it out. It is just about creating the ecosystem in which people want to live. And people enjoy living in Prime. So money or not, I would argue that Jeffy is going to get more of that money, even if it's less, than anyone else will. So if you look at it as, let's say every person spends $100 a month on shit they don't need, it's discretionary items. I would argue that probably more than half of it is spent with Jeff at Amazon. Don't you think? Probably close.
Probably. I mean, you also need to factor yourself, like for Amazon specifically, they've gone hit. They're down like 30-something%. And to put a perspective, during this pullback we've had, they're down like 30%. I think Snowflake's down 34%. So like they're moving like a high beta risk on stock in this pullback. So, well, am I sharing my screen still, by the way?
You can be. 1 second.
Yeah.
There you go.
Let me put Amazon up on here as well.
Go.
So for Amazon, there is obviously a massive tailwind on their e-commerce business via logistics robotics. That's not being discussed enough. That's going to be a huge margin expansion opportunity. So I think Amazon also owns the full logistic stack. They can control their costs. They don't really rely on third parties. So they can anticipate, there's more optionality for them during this kind of environment than, I don't know, some other, like Shopify, they don't own their in-house logistics anymore. They raise the white flag and they have to go through Amazon or whatever other logistics company they use. That is detrimental in this environment. And that's where they're getting destroyed right now. But Amazon is getting destroyed because discretionary spend will get impacted. You're 100% right. But also, I think the pricing is hyper competitive on Prime. And I also think the king of computes is something that is under discussed for Amazon, where AWS alone is $1 trillion company. easily. I think it's 2 trillion, to be honest. I've said it actually on Fox. I think it's a $2 trillion stock. I think it's a $200 stock by itself on AWS. It's just so powerful on so much runway. So
Yeah, I pray to God they don't parcel it out, dude. That'd be heartbreaking if they parcel it out.
no, I mean, they'll catch a bid if they do, though. They will, because I think
I'm just saying.
I mean, I think YouTube should be
That's
their
why
own
I've been
company
buying
too.
Amazon.
Oh, I think
agree.
everyone would
That's why I've
dump
been buying Amazon.
stock
That's what I'm saying is, I hope they don't spin that up as a separate entity and say, "Oh, we're going to issue stock to this." I've been buying stock thinking I was buying it the whole time. Know what I mean?
Interesting. I mean, we'll see. We'll see. But it's an anchor stock at the end of the day. So, like, I mean, it's still got high momentum, which is nice to see. I want to see. All right. So, what was the other stock? We have 2 minutes left. There's a couple other names.
Well, Porter asked this question. I liked it. If negotiations evade any significant increase in tariffs, what's your play? So basically, it comes back, hey, just kidding, guys. We're not actually doing all that tariff stuff after all. Everything's going to be fine.
Oh, we just saw a glimpse of it this morning. It went up 6%. The market roared, like 3 or 4%,
dude,
like ripped.
S&P moved like a fucking penny stock.
No, we're up 5% in 2 days. I think we'll be up 5% in 2 days if
it's madness.
It doesn't happen.
Like,
I think
I've never seen the S&P move like that.
But
it's
again,
like it was a penny stock, dude.
Today was detrimental for confidence again. What? A White House, someone connected in the White House said something, and then the White House rebutted that within an hour. Nobody's on the right page right now. It's an absolute circus. And that's just diminishing confidence on what's being said. You can only trust one person, and that's Trump right now. Literally only Trump, because everyone else is completely out of the loop, apparently. They're just saying conflicting information, and who can we trust? We can't trust anyone right now. That's the issue. There's no clarity.
But one name is held up better than most. It is our godchild, if you will. Young Palacios, Palantir. Unbelievable.
Won't quit.
It won't quit. Look at that. Like, that monthly chart is stupid, dude. It's just stupid.
No, I can't believe it's above 50 still.
Unreal strength. Like, unreal strength. Didn't even test the lows off 63.
This is so funny.
That's
intrinsic value $18. Dude. What a premium.
That is crazy. Today the market like bought it. So anytime you're looking at price, like sell off on Friday was 80 down to 73 at the close, right? Pretty big swing, 10% swing roughly. Today we went down to 67. Buyers pushed back up to 81, eclipsing the previous high. That is, if you look at general macro markets right now, that's insane. When markets are plunging like across the board, plunging, and you get a stock like this where the bears actually overwhelmed to a new relative high off of one of the worst performing days I've seen in a while, that tells you where the confidence is.
I mean, first, Palantir thrives in this environment, by the way, guys. Like, this is what AI is supposed to be, an operating system in your enterprise. Like, when everything's going up in price, we need to figure out how to be the most operationally efficient as we can be. You adopt the operating system of AI, and that's Palantir's Foundry. That just is. So, like, it's somewhat of a tailwind for them. And my only issue is, like, I don't know the government side of their business, like how much it's going to be impacted on Doge related stuff. I don't think it's going to be, because I think it's a massive tailwind, but it's been kind of dead silent, which is surprising to me. Like, it's been very silent on Palantir and government stuff this year. And I think a company that's trading at 60 times their sales or 40 times their forward sales in this environment, like, you'll get severely punished if you miss. Like, it's going to be ugly. So I don't know. I would love this stock. I would add to the stock. I'm not saying no. It's still my top 3 position. Yeah, it's my number 3 position, but we added below 10. Like, we don't feel the urgency to add right now. It's a very decent chunk, and it's getting better. I mean, if you loved it at 120, you love it at 70. Let's just say that.
I just loved it below $7. That's all I got to say. I just loved it. But yeah, I can't get over the strength here, and on significant volume too. That's a big component that has to occur, and you can see that somebody's protecting these 70s. Look at this, boom, boom, boom. Like they're saying no, sit back down. No. Like this, it's just, to me, I don't know if I've ever seen, given the macro conditions, I don't know if I've ever seen a name hold up like this that is so speculative in nature.
Is there
Nothing
it's,
is
it's
done.
it's a unicorn. It's a unicorn.
It's the unit is what it is. This is throwback Randy Johnson, dude. You underestimate, and he cleans your clock and hits a bird. But yeah, it's the name that has just I'm kind of speechless. I'm happy because I own it and I'm impressed, but I'm also just kind of speechless. Like, damn. I wonder, I would pay $1,000 just to know this. What percentage of that is retail? That's what I'd be very curious to know. Because I think retail is starting to impact markets in a way that it's becoming noticed.
I think it's like 50-50. It's close to being 50-50.
It's a lot of power, boys and girls. We can get to 51%. That's where you win. But doing it the right way. And our goal is to teach you exactly how we do it so that you can do it in a way that's your own. So I love you. We'll be doing this again on Friday, going through the Amazon trade and breaking down some specific details. You can get the link there below. Make sure to go to Shai's Twitter account, sign up for the email newsletter, get those earnings reads, understand what's happening in the market with these companies when they come out, hot off the press, not 5 days later when the move actually happens. So I appreciate y'all. Ta-ta for now. Stay blessed now.